Proposition 19. I know that if you own a home in the state of California, you've heard about this proposition, and like a lot of people, you probably have a lot of questions on it. Hi everybody, my name is Maggie Clemens. I'm the owner and broker of One World Realty, and I wanted to just put together a quick video to kind of go over the highlights of this proposition and answer some of the questions that are out there. So first off, what we're going to talk about in this, we're going to talk number one about Proposition 13, then Proposition 60, Proposition 90, and how all of that changes with Proposition 19. And then I'm going to go over some examples so that it makes it a little bit more clear. So first off, let's talk about Proposition 13. Proposition 13 was known as the People's Initiative to Limit Property Taxation, and limit it did. It was voted in by the California voters in 1978. And what it did at that time, it moved the property taxes back to what the levels they were in 1975. And then it limited the property taxes to 1% of the assessed value. Typically right now, if it's 1% of your purchase price. And then it also limited the increases so that it could only go up by a maximum of 2% per year. Now, let me be clear about this. Proposition 13 did not change. It is still there. It is in no way affected at all by Proposition 19. So don't worry about it, but I am going to show you how this comes into play later on. Next, let's talk about Proposition 60. So Proposition 13 was brought on to help senior people that were on a fixed income, or anybody basically that was on a fixed income, and it kept the property taxes from going up. But what it did was that it decreased their ability to move, because if somebody's owned their home for 10 years, and you know how prices are going in California, and the new home, if they wanted to sell that, the new home would be assessed at the current purchase price. So what that did was a lot of seniors who were empty nesters were stuck living in their big homes because they couldn't move, because they couldn't afford what the new property taxes would be. So Proposition 60, came along, and what it did was it allowed senior citizens, and you gotta love California that they consider seniors 55 and up. Applies to a lot of us. It allowed people that were 55 and over to sell their primary residence and transfer that low tax basis that they had with Proposition 13 to their new home. Now, there were a couple of stipulations. The new home had to have been of equal or lesser value. It could not go up in value. And that turned out to be a little bit of a sticking point, but we'll go over that. Now, they had that option. They could do it one time. And so if you're over 55 and you did it once, let's say you turned 55, you did it once, you could no longer take advantage of that. And what it did, you had 2 years to find that replacement home and to transfer that tax basis, but it had to be in the same county. So along comes Proposition 90, which allows for the transfer of that tax basis to other counties in California, as long as the voters in that county also approved it. Currently, there are only 10 counties that you could transfer your tax basis to. So with all of that in mind, the voters then voted in this November, or past November 2020, the Proposition 19. And that will have an effect on the sale of your primary residence, and it will also have effect on the transfer of the property by gift or inheritance. So let's go into that a little bit deeper. This is kind of a chart that we came up with, and you'll find this, I'll show you later on where you can find this. But so we're going to go over what the current law says, and then how it's changed by Proposition 19. So again, the current law allows you to sell your primary residence. You can transfer that tax basis within 2 years in the same county or use Prop 90 and go to one of those 10 counties, it had to be of equal or lesser value, and you could only do it one time. There was an exception if you did it when you were 55 and then you did become disabled, then you were able to do it a second time. Now that law still goes through till March 31st of 2021. On April 1st of 2021, Proposition 19 kicks in, and the difference is now it's still the principal residence. It can still be transferred within 2 years, and it's anywhere in the state of California. Anywhere you want to move in the state of California, you can transfer your current tax basis. Now, here's the big thing. It is for any value. So if you have a $700,000 house and you buy an $800,000 house, you can transfer that tax basis. Now, it will have the $700,000 is covered, but you will pay a difference on that $100,000. So it's kind of the best of both worlds. And I'm going to go over that here in just a second when I go over the examples. But now you can do that 3 times. So you are not locked in a home. If you transferred your tax basis from Proposition 13 at 55, you can do it 2 more times within the state, anywhere in the state. And that goes into effect April 1st of this year. So let's look at a couple examples. So the top one is Proposition 13. And you'll see up on the top right, I used a tax rate of 1.22982. It's a pretty common one here in the San Diego area. Now, just to be clear, Proposition 13 says that the state gets 1%, but the counties and local jurisdictions, voter approved, can go as high as 0.25. So it's rare that you see one that is exactly at 1%. So if this home was purchased at $32,500, which, believe it or not, San Diego homes did used to be that low, the property tax would be $400. Over the years, remember, it increases 2% or a maximum of 2% per year. So now the current assessed property value of that property is $76,636, which brings the annual property tax to $942. The market value, however, so that $32,000 home is now valued at $754,967. And that, if you bought that home today for that price, your property tax would be $9,285 a year. So you can see why people were reluctant to leave that $942 when there was a possibility that it could go up by that much. So without Proposition 19, you can see if you buy a $1,254,000 home, your property tax is going to be $15,434, because remember, you could not buy a home of greater value. It had to be equal or lesser value. So it didn't matter what you did, you were going to be paying a higher property tax. But with Proposition 19, you now sold your house for $754,900, and you are purchasing a home for $1,254,964. Normally, without Proposition 19, it would be, your property tax would be $15,434. But because of Proposition 19, you are only going to pay on the difference. So what happens here is the $754,967 that you just sold your home for, is that property tax of $942 is transferred over. The additional $500,000 is taxed at 1%. So now your current property tax will be $7,092, as opposed to $15,434, and that is a savings of $8,342. So there's a lot of good things here. Number one, you can transfer it up to 3 times. Number 2, you can buy a house that is of greater value than the one that you're selling. And number 3, you're only paying an increased property tax on the greater amount. That's a good thing, and we're hoping that it will free up some people that are living in these giant homes. They're empty nesters, 4-bedroom, 5-bath. They don't have the money to maintain the upkeep, and they don't want to move because they don't want that property tax going up. So this is what Proposition 19 was designed for, at least one portion of it. The other portion is, and this has got a lot of people up in arms, is it affects the parent-to-child and grandparent to grandchild exclusion. It actually narrows what happens to inherited property. And instead of kicking in April 1st, this actually kicks in February 16th. So this is an important thing if you are thinking of leaving property to your family, or you are thinking that you might be inheriting property. So let's go over that. So the current law, the way it sits, is that it must be the principal residence of the transferor, so the parent or the grandchild. It must be their personal resident. There is no value limit, and it must be a resident or a home site. There is a transferor lifetime limit of $1 million. So if I own 3 homes and they are greater, the value of them is greater than $1 million, well then I got to kind of figure that out. But it's maximum of $1 million. And then the parent of the grandchild must be deceased. So if the grandparent and their child had a baby, and that's the grandchild, the grandparent cannot skip over their child and give it to the grandparent. Their child must be deceased in order to make that bridge. And then it must be transferred within 3 years, or before it's transferred over to a third party. Now, Proposition 19, now, this is the big thing, is that it must now be the personal residence of the transferee. So, grandparent or parent can transfer it to their child or their grandparent or their grandchild, but that must now be their personal residence. The value of the current plus $1 million, and family homes or farms. I'm going to go over some examples here. But the reason this came about is that, let's go back to the example that I had before where the property tax was $942. And there was this case with a couple of actors. They inherited their mom's house, and the property tax was like, $400 or $500 a year. They never lived in it. They just immediately rented it out and just kept it. I mean, it was pretty cheap. So this came about because rental properties or leaving inherited properties to your kids, and it's not the level playing field if you can keep it as a rental. So now the transferee or the child or the grandparent, it must be their personal residence. Other property, it eliminates any exclusion for anything other than principal residence. So you used to be able to transfer, there was some stipulations, rental properties over there. So that has now been eliminated. It must be a personal residence. And the same is the parent over the grandchild must be deceased. And the filing period is, now here's a little thing. So the new owner, the child or the grandchild, must file for homeowner's exemption within 1 year. So that is telling the county and the state that this is now my personal residence. And that is probably how they're going to figure it out until they start finding the loopholes there. So let's go over some examples. So the first one is we have a primary residence. The market value is the same as the other ones, $754,967. The assessed value is $76,636, and the difference is $678,331. So I'm just using the same numbers, and hopefully that makes it a little easier. So through February 15th, because remember this portion of Prop 19 goes into effect on February 16th. The old law is, let's look at it. So we have the original purchase price, $32,500. The property tax was $400 at that time. Over the years, it's gone up in value. Now the property tax is $942. It is now worth $754,967. Without Prop 13, that would be $9,285 would be the property tax. The old limit of $1 million does not apply, and the inherited assessed amount. So when that property was left to the child or the grandchild, they get that current assessed value and the current property tax of $942. So on February 16th, what happens is no change. As long as this was the primary residence of the transferor and also now the primary residence of the transferee. So if your child or grandchild decides that they are going to make that home their primary residence, there is no change in the assessed value or the property tax. Now, let's take it a different way. Let's say that the property tax, the market value, is over $1 million. So in this case, the market value is $1,176,636. And this is not out of the realm. I just sold a home in Mission Hills last year that was the same exact thing. The assessed value is $76,636. The difference is $1,100,000. How does that play out? So the top chart is the same up through February 15th. Everything stays the same as it was. But after February 16th on this one, because it is over that $1 million and the $1 million limit applies, now instead of having a assessed value of $76,636, it is minus $1 million, which leaves it at $176,636, and that property tax is now $2,172, which is a difference of $1,230 from the old way it was calculated to now what's going to happen with Proposition 19. So you do see it's still a benefit, but it's not as great of a benefit as it was before the end of the 15th. But what if it's a rental property? Let's look at the same thing. I'm using the same numbers, $1,176,000, assessed value is $76,600, and the difference is $1,100,000. What happens if we transfer a rental property? Well, guess what? Rental properties cannot be transferred. They can only be a primary residence. So what happens is under the old law that expires February 16th, the transferred amount or the transferred property tax basis is $942. But because it is a rental and it is not a personal residence, then your child or your grandchild will now have to pay $14,471, which would be the same if they went out and purchased a home for $1,176,000. So they lose that tax basis, and that's a difference of $13,528. So the thing that you are going to have to do is you want to pre-plan for February 16th. But if you are planning on leaving property to a child or a grandchild, then you must take into consideration the unintended consequences, capital gains, estate taxes, gift taxes, and then the legal exposure if you could have a potential lawsuit or divorce settlements. So that's the big thing on this one, and this is what's got everybody all up in arms. It's not such a bad thing. You just have to remember that it must be a primary residence. Now, as far as I know, the law does not say how long it has to be a primary residence. So that's already one little loophole that's probably going to be closed sooner rather than later. So I got most of this information from the California State Board of Equalization. You can get and go through these charts here, boe.ca.gov/Prop 19. And the people you're going to want to talk to is your estate tax attorney and your tax professional. I am not either. I just go through this and try and explain it as best I can. So hopefully that helps. If you have any questions, I am more than happy to answer anything that I can. Thanks for watching. I'll see you soon.